Hey everybody, thanks for tuning back in. It's Lee here, Crypto Mainly. Wow, the market's looking exciting at the moment, so let's get straight into the content. Okay, so this was the futures long position that I was talking about yesterday in the trade. So I was looking for a pullback, as you remember. You can look back to yesterday's video. You'll see that I was talking about a pullback to this dotted line here. Of course, we got the bounce and obviously broke above the neckline there. So that was a key point there. If I just draw that in for you, you've got a neckline of the W just about there. So once that's your buy signal. Once we've broken above the neckline, that was your buy signal. If you hadn't entered already, for me personally, I entered here. I was waiting for the test. So that doesn't look very good. Bear with me for a sec. Wow, that was scary. Just deleted everything that I had then. So that was scary. But okay, let me just get rid of that little line there. Okay, so this is what I was looking at here. Obviously, this the pullback to this support. So what I did personally is I entered the trade at support there. Obviously, set my stop loss just with, with a 2-to-1 risk reward, and I actually added to the position once we broke the neckline here. So first entry here, second entry there, and I closed the trade in its entirety when we hit the measured new target there. So what's happening now? Let's have a look at a larger time frame. This is the chart that we looked at yesterday. You can see this is obviously the significant neckline that we were talking about when we were talking about this first trade. So the first area, if you like, the main area of resistance that we spoke about before, with these various tests where you've got these big failures, is between you can see in the dark blue there, 44,550 and just below 45,000. So 44,500 to 45,000 basically is the level that this has been, it's held as resistance for a long time, as I said yesterday. So what do I mean by a long time? Well, if we just go onto a larger time frame for a second, you'll see that actually it's acted as support here, actually failed as support there, broke through resistance, came back down and retested, bounced and failed, and then obviously came again, had another attack at it. But yeah, in terms of, is it more significant than this area here? Probably not, in my opinion. I don't think it's actually more significant than that. But nonetheless, it's obviously, you get the point. It is actually an area where we need to be a bit cautious, and as you can see from this chart here. The only thing that concerns me about things like this is, of course, every trader, if you look at Twitter and social media and everything else, everybody is looking at a triangle like that. And in my experience with trading, as I say, I'm a professional trader. That's what I do for a living. So, that's on a retired basis. So, if you look at this, you've got a resistance, a neckline of the top of this rising channel. Now, this is a reaccumulation formation where you've got the higher lows along the bottom there, and you've got the same level of a flat top. That would suggest an accumulation range here. So that's great. But the thing is, technical analysis is one side of things. There's all sorts of other things to consider, as most of you will know. Some of you won't. So things like on-chain metrics, the coin spend, the profit and ratio for the coins, the stable coin ratio. There's all sorts of MVRZ. There's all sorts of things. The pure multiple. There's on-chain metrics where you can look at the amount of coins spent, the profitability of each coin as it's moved. All sorts of things. So you've got the technical analysis one thing. You've also got on-chain metrics another. And thirdly, you've got everybody's eyes are looking at this. So what do I mean by that? Well, it makes sense. If you are one of the whales in this industry, you know that there are so many people looking at this level and waiting for a breakout through this level. So what does that mean? That could mean potentially that that the market makers, if you like, will wait for the breakout. And in fact, if you see that descending resistance line there, that would indicate when we get to there that actually we've broken out from the neckline, and it will roll back over from there possibly, and then maybe have, you know, like a testing zone here, everybody will think it's broken out and now is finding, you know, support. So this is an SR flip, so it's being shown as resistance to the level. It comes up and then then it bounces along it. Ignore the descending one for now, but it will look like that's actually acting then as support. And then just when everybody starts to, you know, go long and everybody's happy that support's holding and everything else, and they'll put their stop losses down here, what do you think is going to happen? Personally, I think this is what's going to happen. You're going to get a quick wick, some price action down, possibly even, you know, all the way down to the bottom of this, you know, of this rising trend line here. It's possible. It's unlikely to go that deep, I think. You know, it's more likely to come down, take out everybody's stops, and then take off, you know, to the races. So let's just have a little bit of a closer look at that, actually. So let's just have a look in terms of from a fib measurement. Let's have a look from the recent low down here to the high. Just zoom in for a moment. Excuse me, sorry, just excuse the picture's getting a bit busy there. But so we've gone from the low to the high. In fact, there's actually a, you know, slightly lower low there. But I mean, you know, you can argue you should really perhaps draw the fib from the actual low there, which is what I'll do. See what difference that makes. So you can see that the 38.2 is actually this neckline here for the top of this formation here. So you've got resistance there, and it's actually, you know, when you see things like that happening, where things are lining up, and also you've got the 0.5 there, which has shown. So price has come up. It's tried to break out above this neckline, and then rejected and fallen back up, you know, come back over, and then it's come back down to the 0.5 Fibonacci level, and then taken off. And you can see that you've got one test there, one test there. So does that mean that it's, you know, it actually means that it's less likely that the price will come back down to the 0.5 again? It's possible that, as I said before, what is that, you know, you'll see something possibly, it'll go up, it will consolidate for a while here. Everybody will think that's you know, just make that a bit clearer. Sorry. So it will come up against that. Everybody will think, yes, it's broken out. You've got a fantastic opportunity now because it's broken through resistance and now finding support, and then people will be placing their stops just below, and then what will happen is we'll probably get something like this, maybe even like that, and then come back down possibly to that 38.2 level. So as you can see, 38.2 level here. This is where the difficulty is with trading is, you know, there's no technical analysis that will warn you that that's going to be happening. But obviously, having traded I joined the cryptocurrency space in what was it, November 2018. So that was, I'd missed the run up in the end of 2017. I joined at around about the time Bitcoin had been bouncing along at 6K for pretty much a year. And then just after I joined, in sort of, I think it was February time, 2018, whenever, you know, I just got excited and was just thinking, wow, this sort of the cryptocurrency world is, you know, it's like a vast empire and it's so exciting and everything else. And I put some money into it. 6,000 people were thinking that was going to be the floor because it had, you know, bounced along at 6K for, as I say, pretty much a year. And then the price dropped down to 3,400. And obviously then everybody in the space was saying it's going to be going to 1,000, and I remember people saying it was going to go less than 1,000. You've got obviously the haters saying it was going to go to 0 and all the rest of it. But anyway, back to the analysis side of things. Once this happens and it comes back down maybe to the 38.2, I don't think it'll come all the way. Oh, sorry, beg your pardon. I don't think it'll come all the way down to, you know, down here. I just put the highlighter on there, so I don't think it'll come all the way down here. It's possible, but I don't think it will. I think more likely that you'll get this bounce here, which is the 38.2, as I say, but or possibly you may get down to the 0.5 and then take that bounce, and then obviously after the races then. So if we look back on a bigger scale, that's when I think we'll continue up. Hence the reason I've drawn this pattern here. Ultimately, this is the kind of, so you can't really see it very well there, but I was projecting the moves for this for my trading group. I was projecting the moves here when we were at this level previously. Again, talking about the key, how relevant that 44,500 to 45,000 level was back then. So that's when we started to talk about it, and I was projecting that that we're going to get this type of price action. And so if you look at the price action, it hasn't followed that exactly, but it's pretty good. And that's really, when you're talking about technical analysis, it's only based on previous, what's happened previously. Technical analysis is only, you're trying to establish the probabilities and possibilities, but there are no guarantees. It only takes some a couple of whales, or some geopolitical event, which obviously has happened recently, which is all very sad. But it only takes something like that, and the markets, the traditional markets turn for the worse, and then that affects the crypto market. And as cryptocurrency is volatile, very much more volatile than traditional markets. So please be careful, take care. Always use stop losses, and make sure that you manage your risk management properly. If you don't know what I mean by risk management, then take some time out of your day to learn risk management properly. I am going to put a video together about that subject specifically, and try and share some of my experience with you. So what we're going to look at next is the USD.T, sorry, the tether dominance. So if you look at, why are we looking at tether dominance? Well, why are we looking at tether dominance? What's the significance of how what the percentage of tether is in the market? Well, of course, what it relates to is the percentage. So the total market cap, it's the percentage of the total market cap which is currently in the USD.T stablecoin, which of course is Tether. Tether is the biggest of the stablecoins at the moment. If you look at, let's go back to this chart here. If we look at this, if we overlay the USD.T chart price action onto this chart, you'll see just how significant it is. Thought I had that already set up. Sorry, bear with me, guys. I thought I'd already had this set up, but was clearly not. Some of you might be watching with a keen eye to see how I'm doing this, but I'm looking at a Bitcoin chart, as you can see, and I'm going to add, by pressing the little plus sign there, I'm going to add the USD.T dominance to this chart, and I'm going to put in there as a new price scale. And what that does is it overlays the USD.T dominance onto this chart in comparison to Bitcoin. So let's just have a quick look at that. As you can see, let's just change that something a bit more pleasing to the eye. So what you'll notice is the US, the tether dominance. It's almost an exact opposite of what's happening with Bitcoin price. Okay, so there'll be some of you that are thinking, well, what's the point of looking at it if it's the same? Then it's no different to you looking at Bitcoin price. The dominance will be the opposite of that. But what it can be helpful for is if you're looking at the total market cap, the actual complete and total market cap of everything, Bitcoin and all of the altcoins, this can give you some indication of where the money is flowing from, if it's flowing into stable coins or whether it's flowing out of stable coins, and in fact whether it's actually flowing out of the market. So if you're if the dominance USDT is increasing whilst the total market cap for the entire market is decreasing, then clearly people are starting to cash out, and so you can use the USDT dominance as quite a valuable indicator in respect of that. So, and that's the reason why I use that. Another thing. So what's the relevance of that is if you look at, let's have a look at coins. So if we have a look at high volumes, so the 24-hour volume, the biggest amount of volume, nearly 57 billion, is actually been traded in Tether. So the dominance of the percentage of the market share, coupled with the fact that it's the highest 24-hour volume, generally speaking, Bitcoin and Tether usually skip between each other, whether, depending on whether Bitcoin is bullish or whether it's bearish. These two will usually be the top traded in terms of volume, and they do actually swap around each other. So you can actually, just by looking at this, get an indication of which way round we've been going in the last 24 hours as well. So just as an alternative, an alternative way of looking at things there.
Bounds.
So going back to we've got quite a support line there, which is going back for quite a long time, and I've also just penciled in the lows of the recent sort of range supply and demand zone here, and you can see that the dominance, this is Tether dominance, is actually trying to break down, which will mean that the amount of the total market cap which is sitting in the Tether stablecoin is going to be reducing, which generally, which translates to being spending usually on coins, and so money coming into the market. Bitcoin dominance, we're in this rising channel, which we've been looking at a few times, and obviously it's rolling over, and it's come back to bearish retest, and now it's rolling over again. It's finding a little bit of support in this area here. So, it's got a little bit of work to break through there. So we may get a little bit of a pause in the market and everything feel a little bit quiet again for a little while, whilst it bounces around the area there. So we may get something. Yeah, so we may get something that looks like this. And then once this breaks these levels here, I mean, you're looking at about 42 point. Let's just actually do that accurately. Let's not be lazy about these things. Let's pop it on there. So let's put the horizontal array on there, put the magnet on, pop down to there. So let's go for the low, the actual low there. So what does that look like? So this is the level to break in terms of dominance. Once this level breaks, we're going to see some rather lovely altcoin action. That level is 42%. So bear that in mind. The invalidation of this, I mean, if we do get some support here, and this doesn't break down, and we get we could get dominance coming up back up, and retesting and then coming back down. It's possible, and that will obviously also translate to, if we get a pump out of Bitcoin and things, people will move all of the money that they've got in the markets out of their stablecoins into Bitcoin to take advantage of a big Bitcoin move. So if the breakout happens, we may see altcoins suffer whilst this retest, this retest happens upwards and then comes back down, and then obviously alt season here will be actually even bigger. But yeah, a lot of it, a lot of what I'm talking about now is speculation, but I'm just trying to give you an idea of, I've been trading for a long time, and just what I think and my experience of what I think is going to happen. And also it may help you if you, learn some of the techniques that I use to translate some of the charts and things that you look at into what that means. So the Ethereum, we were looking at this yesterday. We were bouncing along resistance there. We have broken out. We're, I think, 3180 level there, 3180. I think when we get to there, we'll then get that perhaps a little bit of a move back down to 3000. So just watch out for that. So we get to around about the 31, maybe even up as high as 32, get a wick above it, and then come back down to 3000. But again, that would be a really lovely retest. That would be a perfect entry just there. If we do get down to 3000, that would be a perfect entry point. You could put quite a tight stop loss in there, which obviously means the risk reward is great then. So if I just use the measuring tool here, if you were to enter the trade position there, you could effectively just have, if you pop the you've got a low here, so pop the stop below the lowest point just there, and you can see that you could then pretty well let the trade run up to then the 61.8, which is at 3,850. As you'll know, you'll get this type of thing along the way. So it's not going to go straight in a straight line. So it will try and scare you and shake you out of your position along the way. But I think if you get down to that 3,000 level, that's a really nice entry point. You might get something even as crazy as that. And then obviously into the summer, I think we're going to go. I think Bitcoin's going to be going sideways through the summer, and also altcoins going sideways as well, which will translate to a rather nice alt season for the summer months. Okay, so going on to the trade position for today. So I've got an altcoin trade position for you. Hopefully you've enjoyed the ones over the last couple of days. The other ones that we've spoken about, all of the trades are all in profit. They're all looking nice, and obviously Bitcoin is actually trying to break out again. So if we look at today's, if we look at the price right now, you can see Bitcoin it is trying to break out again yet again. So another bullish move coming possibly for Bitcoin there. This is obviously blue chip DeFi, one of the first mover advantage. So the high to the low is actually on the low there. It doesn't look like it is. Yeah, I mean it's pretty well there. So what I've done there is I've gone from you see that there's like a bottoming pattern here. So I've gone from the low there, and I mean it's very very slightly out there. Actually, looking at that, looks like the wick's a little bit different, but it might be because I did it on a different time frame. We're on 12 hour now. Let's pop it on the daily. Nope, that's not the reason. Okay, I don't know what the reason is for that, but anyway, I'll just leave it there, and I'll have a look at that anyway. But I mean, it's only going to be a slight change in prices. But anyway, you've got the pump up, and obviously you've got the correction now. Institutions will be looking at this reload zone, so the 78.6 to the 88.6, which is a 78 to 88% retracement from the high, is where the retail investors will be looking. Institutional investors will be looking to take their positions there. So you've also got a descending resistance line there. We have broken out already. We may come back down slightly. It's possible that we come back down, retest this area here. I'll zoom in again in a second. But we have broken out basically, and this is the institutions will be looking at the reload zone and this breakout. And so don't be surprised to see money pile into AAVE. As I say, it is a blue chip DeFi project, as I'm sure you all know. So yeah, I mean that's going to be. You can see the projection on there, 182%. If we get back up to 61.8 level, which is $433, but I can see you're going to at least get up to the you're going to at least get up to the 38.2. And that's 115%. Again, it's not going to shoot up there immediately. So if we do look at like the low to the high move there, that moved almost 90%. A little bit more. I think it's actually more closer to 100%. But 90% in 14 days. So I'm not saying that will definitely happen again, but you can see that once the momentum shift changes, potentially within 2 weeks we may even have, you may have even got your first double. 100% profit. So that's a nice trade, guys. I hope you'll don't this is only financial advice. I'm not a financial advisor, but as I said, I'm going to be taking positions myself based off what I show you. That's not to say that you should, of course. You need to be very careful, and the market can turn around. The benefit I have is that I'm looking at the charts all day long, and I've got alerts and things all set off. So if the market does turn for the worse, I'm prepared for that, but also using stop losses and risk management profile, all that type of thing is something which is quite a skill, which I also use in addition to being able to be available to be able to sort trades out, come out of them quickly if the market shift does change. So please be careful. There's lots to think about, guys. Rune is going to be the chart I talked to you about tomorrow. those eagle-eyed among you, don't jump the gun and look at the 61.8 just yet. But I'd like to talk to you about this tomorrow. There's a massive potential here. But don't just jump in blindly today, guys. There is some things to think about and talk about. So I'm going to watch what happens over the next 24 hours in terms of price action. And I really look forward to sharing what could potentially happen for this project, for this price action from tomorrow. So yeah, okay, guys, as I say, on the way up, don't forget, take profits on the way up. Take profit and buy something real. All the best, guys. Take care. Speak to you tomorrow.
Bounce.